We are live and recording.
This is Market Week Live for October 31st, 2025. Information and support for traders and investors. Welcome, everybody. Those people that are level 1 to 4 members that are in the Zoom room, and those of you that are on YouTube or happen to be watching a clip of this on YouTube, welcome. Glad to have you here. We have lots of great stuff to show you today, and we're going to get right to it. What we're going to bring is our questions, our Q&A section right now. The floor is yours. You can ask about our services, trade planning ideas, chart analysis, trading issues. We'll be glad to help you with any of that. For our members 1 to 4, they receive the link for this show and then can come in and ask questions. So if you're not a member, please do become a member and then join us for these live shows that we do. And we'll be glad to take your questions. Then, for our special promo, this is something we only do sometimes once, sometimes twice a year. This is your opportunity to learn about cycle analysis and the workshop that I prepared over a long period of time. And my 50 years of study are built into this workshop, and it's just a fantastic way to understand the markets. Matt's going to review that with you, and I'll join in on some of that and show you what our workshop looks like. And then I'm going to bring you my market analysis, some of the evidence, probabilistic projections on price and time. We're going to look at SPX and VIX today. I know there's some questions out there regarding natural gas. I'm sorry, regarding the NASDAQ, and also some questions on monthly. Just so that you know, we're not going to review the NASDAQ today or monthly. If you want full analysis on the indexes, you can then watch the Future Speak show, which Arvi does a spectacular job of every Wednesday. Of course, you can ask questions in Discord and office hours, and they're able to help you with it. And there, and the longer term stuff, the monthly stuff, is handled by Katie now. So she's in charge of that. So again, if you're a member, you can write to Katie and ask her about the longer term analysis. So she's the one that's going to help you with that. So today we're going to look at SPX in a couple different scenarios, as I've done in the last few weeks. Interestingly, the bullish scenario almost got nailed that I showed last time that we did this. So it was a good run up that we had. And now we're going to look at a couple of scenarios in there. If you're new and you want to get acquainted with us, get the SIR Lite. That's the Stock Index Report Lite every single day. It's free. Matt does a great job putting that out every single day, and you'll see our analysis and our charts on the S&P 500. Just go to the free stuff on the top of the website and sign up for SIR Lite. If you're brand new, never experienced our work, you'll find that very enlightening. On YouTube, subscribe to this channel, click that notification bell so you know when we put up videos, and we're putting up more and more every single week. Do like this video, give it a thumbs up, and follow me at askSlim on X. Any questions you have, write to Matt at askSlim.com, and he can help you with educational information, special offerings that we have. Any questions on analysis, he can help you with that. So that is everything about us. Now about you is that please remember what we share with you is for entertainment and educational purposes only. We share this with you so that you could then bring it to your own advisor and make sure that you look at your own trading plan, and you can see our full legal and disclaimers at askSlim.com. All right, contact info, anything for our members. If you have issues with your membership or you see that there's website issues, send that to team at askSlim.com. And again, on the content, educational analysis, upgrades, first-time subscriber specials, write to Matt at askSlim.com. These are our hosts. We have our amazing analytical team here. Everybody is here today. I've been at this for 51 years now. I'm going to talk a little bit more about my history a little bit later in the show. Matt's been at this for a couple of decades. Same thing for Arvi and Katie. I'm not sure how long Katie's been doing this, but she acts like she's been doing it a whole lifetime. So she's fabulous at it. So this is just our amazing team. And you can learn about us by going to askSlim.com, about askSlim, and we have some interviews up there, and you'll find those very interesting to watch. All right, we are in our Q&A section right over here. Our members can put questions up in the Q&A. I can see right now that you've got a whole bunch of questions there for me, which are in the future side. The team does the equity side, and right now I think the only one I see in there is NET. So if anybody has any questions on any of the ETFs, any stock sectors, ETFs, any individual stocks, you can put those up right now. And then we will be sharing that with you. This section lasts about 10 or 15 minutes, and then we will be moving on. So let's move into some of these questions right now. I have questions for me for silver, natural gas, Bitcoin, and the bond market. So it's silver, natural gas, Bitcoin, the oil market, and the bond market. So we'll take a look at those. So let's switch over now to the charts, and I will then. This is weird. If you lose my screen, let me know because I'm getting a weird thing here. Very strange. Okay, so let me just get over to the silver chart first. And let's take a look at the weekly and the daily. So some of you might have watched the special that I put out back some weeks ago where I talked about the coming corrective period in silver and gold. And I had said in there at the time, now gold and silver were well below the peaks that they made because we had a exhaustion move to the upside before this peak was made. And then I said that there was likely to be a correction out towards the end of the year. That still holds up, and you can see what happened in here as silver moved up to 53.76, and then came all the way down over here, very close to that 50% support level right over there, from the minor cycle low. There's the minor cycle low. That's the minor cycle 50% level right over there. And that gave you this pullback, which does not look complete to me. Now, let's look at why it doesn't look complete. Let's look at this cycle right over here. Now, remember, when I say look at a cycle, what I'm looking at is a particular rhythm, a repeating pattern from low to low. You see this low here, and you see this low here. So that's this cycle, and you can see how it almost perfectly matches the timing on this. This is not an indicator. This is a cycle bracket, which is a drawing tool. So we use that to see the rhythms and look at the rhythm here and here, here, here. Very perfect, as you see that. And what that suggested was that a correction was coming out to here. Now, if I look at the daily chart, I'm going to use this to fine-tune the situation. So here's the daily chart right over here, and you can see that there are also good rhythms in there. So this declining phase right over here, or that right over there, you can see that aligns with gold. There's the gold declining phase right over there also. And now we've had a break. Now, a break of this support level, which is very important. Later on, we're going to show the cycle analysis workshop. And in that workshop, you learn about all of this, the messaging that comes from the shapes of the cycles and the importance of when they peak, when they trough, and when they break key levels. Now, when you have this break right over here of that key level, let me blow this up a little bit. You see it got down to that support zone that we sold right over there. We said right over there. But then this cycle over here is suggestive that this comes out to sometime mid-November. So that's about 2 weeks from now before this daily low comes and completes. That says to me, first of all, this is broken. So there's a high probability that this is a bear flag that's forming in right over there. RV just highlights these flags all the time, and they work so well when you get the break. So you have a momentum that turned down right over here. Positive momentum this whole time, and you see those arrows there. Those are signals that says the momentum was likely to resume on the upside. Fantastic signals there to come from the slim ribbon PO. Then it neutralized right over here, and actually this got negative right there. That tells us there's a high probability that not only are there 2 more weeks coming right over here, but that this flag is likely to break down. So once you see it getting underneath that kind of little support that's coming up there, you know it could fall down over here. Here is 45.10. Right over here is $43. So those are downside targets that we see right over here looking at the silver market. So if you extrapolate that there's 2 more weeks right over here, potentially, see these blue lines, it's plus or minus a few days. Then you can go back to the weekly chart right over here and say, well, that makes sense because the ideal trough over here is also mid-November. So that's a beautiful alignment that we're looking at. And the messaging that we get from these cycles is that the correction is not over, but it could conceivably be over in 2 weeks, somewhere around that level of 45 to 43. Now, I want you to note something right over here. That goes out to mid-December, this next cycle. If I look here on the weekly and I think about mid-December, and I just take another vector out over here, and here's where mid-December comes out. That shows you that there's a potential that you could even get lower out into December, or that it will make the bottom as we're talking about here in November. So we don't know for sure if that next daily cycle over here that we don't even have a trough for where it begins is going to actually contain further decline over here. But the shape of it and the information from the momentum conditions will help us with that. Right now, we're looking at conditions that are in conflict because the weekly is still positive, as you see right over here, and the daily is negative. When that happens, you very often get your first low as the low, and then it begins to set a trough. Even if this next cycle takes a little bit longer and you kind of get a test of the bottom in there, but you get an idea. You could get a lot of chop right over here over this next month and a half as it fights its way down into the mid 40s or even 43 and then tries to rally because there's lots of bulls out there and I'm a bull. So I mean, I have a lot of silver and I want to add to it when it begins to pull down. So that's my really in-depth analysis of the silver market. I thought I'd do some teaching around the cycle analysis there because we're running this special that we're going to tell you about in just a little bit. And it's just the best way to really understand the markets. Every type of analysis that you can look at is going to be confusing in some way. And cycle analysis can be just the same thing. But when it's giving clear information, it's just phenomenal. So you could see that right over here as this strength was coming in here and the market going up and the bullish signals continuing to come here on the daily. I mean, we had every reason to believe it was going to continue going up, just as I have almost every reason now to believe the correction's not over yet in the silver market. Let's take a look at the BTC market as we see right over here. That is not it. So Katie just did a really good bigger picture analysis on the BTC market where she looks at the monthly. You can see on here on this chart, this weekly chart, this is a very bearish cyclical scenario. Why is that? Well, this cycle right over here, as you could see, was very positive. It was shaped very positively. You had momentum positive throughout this right over there until it turned negative right over there. And it made this little double top, but there wasn't much time to correct, as you could see right over here. The green dash is the ETH market, Ethereum, and the black right over here is the a Bitcoin market. It rallied like it's supposed to because this is bullish, but it never really established upside momentum and failed quickly. That made a double top in that cycle and then a double top in both cycles, as you can see right over there. Now, our monthly cycle is in a condition, if you watch Katie's video, which is on YouTube where our members have that you can see that we're in a period where the Bitcoin market is likely to fall. You have a broken cycle right over here that says this is likely to fall. Downside targets, very optimistically, are 100,000. I think it's more likely this target over here gets hit around 94.5 or this one over here around 85.7 on the downside. And this takes us out into the middle to late period of December. So this is a very negative structure. You have momentum negative. If I go to the daily chart and make that comparison, well, there's your double top, as you can see right over there. And here it's kind of not clear because this was a little early, but this came down to this low, but it didn't take out the low. So is this extending out and making a little lower later low over here, or did we establish the new cycle already? That's a little confusing. Not sure. I'm going to have to wait for more information, but look over here as you're getting these downside signals right over here. Look here on the market, on the option bias indicator is giving you negative signals right there. So you have negative momentum, negative signals over here. You have negative momentum over here. Whether this made an early low and is testing the low and is going to try to rally again, or this made a low and it can't even hold the rally, because Katie gave you this exact spot right over here where it's likely to bounce to and then come down. And so that was just brilliant. And now it's failing. So yeah, you could chop around in here a little more. You could try to go up. But the truth is that I'm not sure how this is going to form. What is the highest likelihood is that once that's over with, that this cycle right over here that goes out to end of the year approximately, and these cycles on the weekly are going to form a synchronized trough somewhere below 100,000, maybe as low as 87,000 is what the highest probability is. Remember, everything is probabilistic that we bring you, and that's what we want you to understand. You know, right now, this is, in my opinion, a high probability that there's a very big decline coming. Based on these shapes, I would rate it at 65 or 70%. That means we could be wrong 30% on that. So, but that's 2 to 1, and I think it's 2 to 1 probability of a significant move to the downside in Bitcoin. Let's take a look at natural gas, at the natural gas market. And here is a market that I have not updated here, and you could see that it had this big upward spike. So what's happened in here is that this rising phase right over here has gotten up through the 61.8% right there, and that says to me that something pretty good is happening. Now you can see these multiple cycles down over here, and that says to me that somewhere out over here, let me just move this a little bit, somewhere out over here, it's likely to have some kind of a pullback. But, you know, it's probably somewhere back over here into the 3 to 320 area out in February of next year. Normally, if this didn't get up to these levels and through that, I would be drawing this in a way that it's coming down to this level, because the highest probability would be that it would take out this low. But now that you've come up here, that raises the target over here. So I still believe that this rally will fail, but then it's very likely that it won't get as low as it could have based on this area, getting through these important resistance areas. Here you could see it's gotten up through those resistance areas, rising in this minor cycle, rising in this intermediate, rising in this right over here. And, you know, with weekly structures positive right now, this again is saying that even if there's pullback, it's likely not to be that deep. This cycle right over here, this dominant cycle, points out to December 8th. This intermediate cycle points out to the beginning of the year, and this cycle over here points out to February. So you can see there can be a lot of movements out over here before we end up making that low. See, this bigger dominant cycle is February before that low is made. So there's a lot of room to move in both directions in here in natural gas before it then does go anywhere. Light crude market has been just perfect. You can look at these cyclical periods in here. Now those yellow zones are periods of risk. That is where these troughs are matching up right over here, where there's a synchronicity that you can see here and here and here. And yes, coming out over here. We've been very bearish on the oil market, and this oil market remains bearish. Momentum in here is negative. When I go to the daily chart, you can see the beautiful cyclicality that's going on in here right now. This rally is coming up just where it's supposed to, right in here, with the resistance levels between 61.40, which it got through, and right over here around $65. I would expect that it would stop in here unless there's some geopolitical problems that come up that would push oil up. But OPEC Plus, they're producing plenty of oil. And the only thing could stop that is if all of a sudden everybody stopped buying Russian oil. And for some reason, they got a shortage of oil, but U.S. is creating a lot of oil also. So the probability of a shortage in oil is pretty small right now. So I would say, looking at this charts right over here, that the probability of this rally failing is high. The probability of this decline on the weekly chart coming out to mid-January to mid-February is also high. So that means that I'm looking for failure. I would be a seller in here in the oil market. If it got over 65, I would then get more cautious on the short side and start to think, well, maybe something a little better is going on. So I think the probability of getting under $55 over the next several months is very high. Looking at this. So that's a look at the light crude. And we also had a question for the bond market. ZB, they wanted to see the short term. So ZB, it's hard to only show the short term because the intermediate term has such an influence on it. You can see in here these dominant cycles are made up of 3 minor cycles that are very clear. And you could see this one over here actually broke that low. So we would say that the next cycle would not take out the high. It didn't, but it formed bullishly, as you can see there. So we expected it to go higher. That's what it did. Now, there is likely a sharp pullback coming over here in the bond market sometime into Q1. So when I have that in my mind, that right now it's bullish, momentum is positive right there. But you see where this low is right there, that's 1530. As long as it stays above these areas, then I'll think it's still okay and try the upside again. That's why we have the upside arrow right there pointing that, well, it kind of looks like it could go up. We could get a scenario where, it, kind of follows this pattern right over here, maybe test the 78.6 and then begins to move up again. So you see I'm following that cyclic information right over there, and that's how this could form. If this came down over here and broke this low, and then we were pointing at something like this, that would tell me that it's a high probability this peak is in this minor cycle. So again, it's the messaging that comes from the daily to the weekly or the weekly to the daily. And you see this little turnover right over there on the momentum. You see that little blue signal right there and right over here, which tells you it's losing its momentum on the short term. You asked about the short term. It's losing momentum in the short term. It has another week or week and a half that it could fall right over here, but we want to see it hold above that low right over here on the weekly, which is the same thing right over here on the daily, and then that would end up to be a positive situation if it looked more like that. So we want to see what the shape is. I said to you that I think there's a big decline coming in the ZBs out into Q1 of next year. So that would match up with the anticipation of a big increase in interest rates out into next year. So that means I should be showing a rally in interest rates here. Here's your 10-year interest rates. And you can see right over here where I'm looking for maybe another month of interest rates coming down. But then after that, this rising phase right over here in the interest rate market should align with that declining phase I showed you in the bond market. And that would give you the period where there could be a very big upside spike in interest rates, which would surprise everybody. I showed you everything I wanted to show you, and now I'm going to turn this over to the team.
Okay, let me share my screen. And let me know when you can see this chart of Cloudflare.
Good to go.
Yep.
Okay, great. So this is a company that's in the tech space, in the infrastructure space, and you may have heard of this company. They've had various outages and scandals over the past couple of years. Here we have I believe it's a 25 bar cycle. Yeah, 25 bars. And you can see how consistent that is. These vertical dotted lines show where the actual cycle troughs occurred relative to these ideal cycle brackets. So now it appears that we've just formed our intermediate low, and this was a very strong cycle. It didn't even retrace to the 23.6% fib. So this is a swamped cycle. It did give just enough to turn, oops, it gave just enough to turn our reversal scout purple, and now we've got the return to positive momentum here. So we are projecting, you can see the levels here. We are projecting anywhere, we haven't got to the 38.2% extension level yet, but here's our 50%, and you can see the various prices here that I've got in here. 61.8, 78.6% would be normal increases after a cycle low, but occasionally after such a shallow retracement, we get a failure. So that's why I've kind of left these other levels in for you to see. And now let's switch over to the daily chart because it was a short term that Terry had asked for. So over on here, we have 44 bar cycles, and you can see that these have all been very positively configured. We only got our slim ribbon to turn neutral here and negative when we made that corresponding synced short-term and intermediate term low. And so now we've got the return to positive momentum. There's our reversal scout, and the slim ribbon has also returned to positive. So this would be a buy zone if we were able to get a pullback here, a bull flag for moves to higher prices. Right now, stalling at the 100% extension level, but we are early in the cycle with positive momentum, so would expect to be able to take that out. And I think that that was the only one that I had.
All right.
Wow, surprising.
Yeah.
Yeah.
Good job.
Thanks.
All
All
right.
right.
Thanks, Katie. Yeah,
I'll
let's
take-
Slim, we just have one other to do actually. So
Okay, go ahead.
yeah. Let me share my screen here. Should see a chart of the XME. So on the intermediate term, XME was obviously just an absolute monster and has been ever since that low that formed earlier in the year. There is a low that is now due over the next few weeks. So we are looking at this as a likely high up here, and we are now starting to sell off. We have a zone, as you can see, we are actually in that zone. So we're going to be looking for a little bit lower. And let me show you why. In the short term, there's some weakening happening here, right? Higher highs, higher lows, higher highs, higher lows, the entire way up. Now this one has sold off closer back to that low, and now we have lost this low here. So we are going now to be really highlighting for little moves up and then oscillations back to the downside into that trough that is due somewhere around the end of this month. Okay, so we're going to be looking for that sort of to oscillate, not anything sharp likely, just oscillate down and then create a really interesting opportunity back to the long side here in the XME. So very nice overall pattern, and that's a look there, Slim. Back over to you, sir.
You know, that's incredibly interesting because when you look at the analysis I just did on the silver market,
Yeah,
we did this work completely independent of each other.
it was the same. It's the
Same thing. I mean,
Right,
looking
that's
at
how it should
silver,
be,
looking
right?
at
Yeah.
metals and mining as it should be, and we didn't consult each other at all. So
No,
it
correct.
just
Yeah.
shows you the consistency once you learn the style of analysis in how analysts will come up with very similar projections and understanding of the market. So I'm happy to see that. Great work.
Awesome. Thank you.
Yeah. All right. So we can move forward now. And my screens are really acting weird, so I think I'm back right now. Okay, so that's our questions. Remember that if you become a level 1 through 4 member, you can participate in the Q&A when we do these live shows. All right, so we're going to get into our review of our special for this week. I'm going to hand this over to Matt, and then we're going to work together on this, and I think we have a lot to show you. So some people are going to be scrolling forward and saying, well, I don't want to see this. Well, don't do that, because this is really going to be great stuff.
All right. Great work, team. Excellent analysis and information. Okay, I'm going to do a very brief review of our overall services here at askSlim. So for those of you that don't know what we offer, we are a technical analysis services firm. We do trade planning, development tools, and overall provide comprehensive education for various trading styles. And if you go over to our memberships area, you will see that we have 4 membership types. And they go from level 1 all the way to level 4. And how this works is as you go from level 1, 2, 3, and 4, the services become more comprehensive in terms of the amount of coverage that you're going to receive. For example, in level 1, you're going to get a deep dive into the indexes. You're going to get a daily report on the major indexes that we cover in terms of the S&P 500, the NASDAQ 100, the Russell, and then there's a report that comes out on some of the Spider Select ETFs. And then you have our core momentum tracker that looks at the longer term. As you go then further to level 2, level 3, level 4, you're going to get more coverage. So we have a focus list of over 84 symbols that is a very encompassing of various markets and ETFs and equities with high volume for option traders. And we have a charts hub in level 2. And then you move to level 3, where you start getting some of our automated tools that we have available, like our market conditions monitor, our ranking system. And then when you move into level 4, you get access to our charts. So those charts that you saw us present on today, you have the ability to import our indicators, our chart grid setups for various trading styles, and you get full access to our charts that we're doing our professional annotations on a regular basis, daily, weekly, monthly, as you're seeing. And then we have a standalone day trader service, which is extremely comprehensive. It fits styles that are for swing traders, intraday swing traders, but that can be a scalper who's looking at just a few minutes, all the way to someone who's looking at a multi-hour trade. So we have 2 cockpits, live cockpits that we show with setups for the cash indexes and also for futures. And so it's very powerful, very comprehensive. And you also have the ability to reach out to our team through Discord for any one of these levels that you can start off. And then day trader, I run the Zooms. If you have questions, you can connect to me on the Zoom while it's live. But most importantly for today, as Slim mentioned, we want to announce that we have a special that only happens once or twice a year on our cycle workshop. And it's over $400 off. If you're new to askSlim, that's an opportunity to get an incredibly deep dive into the work that Slim has done. Really, this is a lot than just a overall workshop. So I'm gonna go to the actual workshop page here, and I'm gonna show you what that looks like. And I'm gonna pull that over right now. So this is what I would consider to be the culmination of Slim's life work when it comes to him being a pioneer in the area of technical analysis. I would consider him to be one of the godfathers of analysis, and specifically a pioneer in then cycle analysis. And he's passed along this legacy of this methodology to this team, and then also shares it with the world through YouTube, and then specifically in a much more deeper way with our members. But this is where you can capture the essence of that through his cycle analysis workshop, which he spent years developing. And he is the producer, and then also the author, and then the person who shares it live recorded in these videos. So he is the one presenting it to you through these online. This is an online workshop. So the beauty of that is you can access it really anywhere that you have an internet connection to your askSlim account. And you go into your askSlim account, and you'll be able to go through all the various modules at your own speed, your own time. And we've added in, as time has gone on since he first launched this, 7 different addendums, and I think there's over 4 hours of new content that has been prepared by us, or that we have felt has been connected to the cycle analysis workshop. We've done special workshops behind the cycle analysis curtains with Slim. So there's it's a tremendous deep dive into his work, our methodology, and really something that you can take on your own, at your own pace. And again, it's online. You have lifetime access as long as you have the account with askSlim. So you don't have to be a premium member. However, if you are a level 4 member, there's an extra $100 off on the workshop. So normally it's $1,295. It's $1,297. It's $897. So the $400 off, and then there's an extra $100 off if you're level 4 member. And we do have a demo reel where we share a little segment of each or many of the modules, so you can get a really close eye on what's going on in the workshops. And again, this is only available once or twice a year. So we're getting into that holiday season where we open up some specials, and this is the first one that we launch regarding that opportunity during the holiday season as it comes. I'm going to turn it over to you, Slim, so you can share a little bit more, in particular with our Slim AI coach that is dedicated to the cycle analysis workshop.
Right. So this is a great opportunity. I think this is now, with Slim AI involved, probably the best opportunity to really take a deep dive into the cycle analysis workshop. I'm going to go to the workshop page here. You should see my dashboard right now. It says level 4 all-in dashboard. And if I scroll all the way to the bottom, as you see right over here, those of you that do subscribe to our workshop can then access it right here. Actually, there are 2 workshops: the 5 essential building blocks to successful trading, which I've been told is one of the best workshops that they've ever seen. Some websites release that from us, and their members just absolutely love it. And here's the cycle analysis workshop right over here. So I'm going to click on that, and that's going to bring you into the workshop page. Now, you can see here on the bottom right is the icon for Slim AI. Now, what's fantastic about this is that when we gave all of our information to Slim AI, then it essentially has everything that is in the workshop. So it knows the workshop, well, it's me. So basically, as well as I do. And you can really ask questions in there. So if I scroll down, you see this is the introduction, module 1. And as Matt told you, we have all of these additional modules in here. And then in many of these modules are additional video links that take you into our tools for techs. So not only are you looking at 20-something modules here, but between that and the tools for techs connections in here, you've probably got about 55 or 60 different videos. I don't know another way that you can learn about the markets better than doing this cycle analysis and everything about a lot of aspects of technical analysis. So this is just I have to say, a phenomenal workshop. It really took me over 2 years to write it, and then to produce it was like 6 months to do all the videos, plus the add-on videos. So if you're doing this and you want to, figure out how to improve your learning, all you have to do is go down here to Slim AI and click on that, and you can see that it opens up the window right over there. Now, if you click on Start a Call, it's going to talk to you in my voice. You can have a conversation with it, just like you're having a conversation with me. Well, maybe that's a little far-fetched, but you're going to be shocked at how that conversation goes. So I'm going to go in here and I'm going to type in this, and I didn't test this or try any of this, but I'm going to say we are doing a promotion now on the cycle analysis workshop. What questions can the members ask you about? If I could type, it would be good. How to best get coached by you. So I can't spell, as you can see, and my virtual twin spells much better than I do. And you'll see that when you talk to them. So I'm asking, we're running a promotion now for cycle analysis workshop. What questions can the members ask you about how to best get coached by you? And I'm going to click on that, and now it's going to think for a second, or more than a second. This is unusual. There we go. I don't know why that took so long. I'll You can blow that up right over here, as you could see. And let's say, how should I approach each module to efficiently absorb the key concepts of the cycle analysis? What are the best ways to practice cycle identification and bracket drawing? On charts during the course, how can I integrate Slim's proprietary indicators like the Slim Ribbons, cycle analysis, clearer signals? What steps do you recommend for building a daily routine around cycle analysis? How do I interpret cycle phasing in multiple time frames and confident directional bias? How can you help me troubleshoot challenges, cycle readings, apparent cycles in there? You can upload charts. I don't have to read these all, but if you upload a chart by copying a chart, saving it, and then uploading it right over there, then on the paperclip, then it will help you interpret the charts. It'll help you with that. I'm going to ask one more question. What if they want to be quizzed? So I asked, what if they want to be quizzed by you, and it'll help a little bit more. Got it. If members want to get quizzed by me to reinforce their learning from cycle analysis workshop, that's a fantastic way to deepen their understanding. Members can ask me to quiz them on key concepts, and you can see all of the concepts in here. So it's almost shocking that it has the ability to give you that kind of information. And to be able to help you with all of that. I mean, I asked it a couple simple questions here. It knows everything about every one of these modules. And you can take the module, watch it, ask a question, get quizzed. The learning process is going to be so much better than it ever is without the AI. I think that you will find it absolutely fantastic. So again, this, in my opinion, is the best way. I'm not there yet. Is the best way for you to learn so many aspects about what we teach in cycle analysis, how we do our analysis, and technical analysis as a whole. And remember, if you do subscribe, Slim AI not only can help you with the workshop, but it has just an immense amount of training. It's a huge LLM. And if you want to ask it about a book that you read, something about some other book, or it knows it knows it all. It's just absolutely amazing. So, and of course, you get that right with subscribing for the cycle analysis workshop. This is a special workshop AI that's been trained for this, and I think that you will find it absolutely phenomenal. Matt, do you have anything else to say?
I think you covered it really, really well. To be able to sign up for it, go to the home page of askSlim. Up in the upper right-hand corner, you have the save $400. And if you are level 4 and you're interested in the workshop, you can write to me and I'll send you the special link for the extra $100 off for a total of $500 off.
Yeah, this should be a great learning experience. Fantastic. All right, I hope you sign up for that. Stock market analysis and projections. Here's some important information. This just tells you about our approach to analysis in the markets and about you using what we share and about using what anybody shares. And the importance of always consulting with your investment professionals, your trading plans, and the fact that you own every trade. Nobody can tell you when to get in or when to get out, because we don't know what your trading style is, what your situation is. You must own the trade, and that's what's really important. And we have a video on trade ownership actually in our website library, which is I don't know, thousands of videos in there right now. So just a great way to learn. All right, 1972 versus 2025. Well, why would I do this? Well, the reason I'm doing this is because I have been in the markets for 51 years officially, because I became a trader on the CBOE in 1974. And I started studying the markets because back in 1970, I became a partner in a chain of men's pants stores. I was 20 years old, and then I became a member and a partner in these pants stores. We had five stores totally back then, and I ran them. I was the buyer. I was very involved in the stores. And my partner was older than me. And he was an investor and he loved the stock market. So I was in an environment where I was selling pants, but I was learning about the stock market all at once. So it was really the beginning of a great experience for me. And in that time, 1970 to 1972, there was a pretty good bull market. There was a bear market that ended in 1970, and then 1972 brought the Nifty 50. That's when the market was roaring to the upside. The nature of Xerox and Polaroid and IBM and all of those stocks that were in the Nifty 50 that got driven up to very high valuations. We have a question actually I didn't answer from Ray on there, Ray, that was about my thoughts on AI and the real potential. Well, this is the answer to that. And any of you that are, or many of you are asking the same question. And I think that what I'm going to discuss here may help you figure that out. As we look at some comparisons from 1972 to what's going on today in 2025. So let's take a look, and I prepared some slides that are going to help me with that discussion. So back in the 1970s, the Nifty 50, they were promoted as one decision stocks, buy and never sell, basically, because they were considered to be invincible companies. IBM, Coca-Cola, Johnson & Johnson, of course, it was Polaroid, Xerox, tons of them that could do nothing but ever go up because these were the stocks that you had to own. Well, let's make these comparisons. AI today, the 2020s, framed as a foundational shift akin to electricity or the internet, with companies like NVIDIA and Microsoft and Palantir positioned as long-term infrastructure plays. So you can see there's a comparison there. Nifty 50, you never sell them, long-term, and the same thing is the perception today. Valuation extremes. Well, the Nifty 50, many traded at PE ratios above 50. Polaroid reached a PE of 90 times. That's 90 times earnings before earnings collapsed. AI today? Well, listen to this comparison. Polaroid 90 times earnings, many of them at 50 times earnings. NVIDIA is trading at 30 times forward sales. It's mind-boggling. Palantir, 118 times forward sales. These are extremes in valuation that are well beyond that of the Nifty 50 back as we look back 53 years ago. Institutional behavior, the Nifty 50, well, pension funds and mutual funds, they concentrated heavily on these names, often ignoring valuation. Sound familiar? Well, today, hedge funds, sovereign wealth funds, retail investors are all crowding into AI megacaps and the thematic ETFs, everything that's involved in AI. Remember, all those ETFs are all linked to these stock prices. So if the day ever comes, anybody wants to sell a stock, well, the ETFs are going to get sold because they're all hooked up together. The macro backdrop back then for the Nifty 50 was a bit different. There was, stagflation going on and oil shocks. OPEC was putting the squeeze on us, and interest rates were rising based on the inflationary scenario. Today, well, the economy is operating at a relatively high rate, and that's post-pandemic because the government shoved so much money and pushed interest rates down so far into the economy, and that brought a very speculative condition, which we're seeing, of course, when we look at cryptocurrencies and things like that. There's a very geopolitically fragmented environment that we have with tariffs and the problems going on with so many countries regarding trade. And the president flying around the world trying to zip up some of these problems. There are basically still fiscal tailwinds for the tech investment. So we're seeing that as all of this circular investing is going on, each of these companies investing in each other and then creating this sense of higher and higher earning potential and higher revenues. Well, I mean, and these companies are all signing up with each other, essentially. There's about 12 or 13 of them that are constantly doing things together. And the stock market always takes that as bullish because gives them a way to keep feeding these valuations that are going on. It's about innovation versus execution for the Nifty 50. I mean, companies were innovative, but they were slow to adapt. And the macro shifts that were going on were really affecting a lot of these companies. So, Kodak and digital photography, I mean, they were fighting against each other. And then, of course, Kodak got wrecked by that. It's the old buggy whip story. A lot of those companies really found themselves collapsing based on the macro shifts that were going on. Today, there's very rapid innovation. Many firms lack a clear path to sustainable revenue and whether they have defensible moats or not. And monetization is a mystery for many of these companies. We don't really know how well that they're going to be able to do as far as monetizing. We know Nvidia is going to sell a lot of chips, but when it's trading at 30 times sales, well, how many chips do they have to sell for how many years in order to make sense out of that valuation? Remember, it's become the first $5 trillion company. If it follows the path of the Nifty 50 and they get commoditized, which is going to happen at some point, well, it could be a $3 trillion company again, easily. So the question is, how defensible is that with all of these companies shooting at them with other chips that can come, especially the chips that can come out of China? The concentration risk in the Nifty 50 represented about 50% of the S&P 500. So that was 50 stocks representing about half of the S&P 500 at the peak. Today, AI, the top 7 stocks, these stocks right over here, Nvidia, Apple, Microsoft, Amazon, Meta, Alphabet, Tesla, they account for over 50% of all of the gains that we have seen in the market in the recent year. And year to date, they account for, just these 7 stocks, over 35% of the value of the index. You go to the next 3 stocks, the top 10 stocks are 40% of the value of the index. This is value concentration and earnings concentration that has so much built-in risk into the market. It's incredible. So you look at the Nifty 50, that was a time period where those 50 stocks, once they started to stumble, it was trouble. And then if you look at the present time period, once AI starts to stumble, you get an idea. Well, maybe Meta was the first signal of that because their spend is not justified. And that's why the stock got crippled this week. And that could happen, that attitude could happen with other companies. The market psychology of the Nifty 50 was basically investors believe these companies were immune to economic cycles. AI today, similar belief. AI leaders will dominate regardless of macro conditions or competition, simply because they're just that good. Think about that. And the post-hype for the Nifty 50, that reality, they underperformed the broader market for over a decade. That's after the 1973-74 bear market. So I was looking at the market 1973-74. I started to trade early 74, so I was trading in the beginning of that bear market. And then over the next decade, I traded the bull market that followed that. I traded the bear market in 1977, the crash of 1978, the crash of 1979, the bear that went into 1982. I traded and witnessed all of that. And that was a secular bear market period as the craziness of the Nifty 50 was being corrected. It took a decade to do that, and we didn't really start a bull market until 1982. That's what a secular bear market looks like. AI today, the risk of similar underperformance if AI monetization lags or regulation accelerates, or the commoditization that I really believe is going to be coming. And investors really start to get a sense that the spend that they're putting into this, based on the time it's going to take to get returns, could be a long, long period of time. And we can actually see selling coming into the market after some very big upside moves in a lot of the stocks, because I think investors are waiting for the opportunities to start to sell and are starting to sneak out of those. So what does that mean for the comparison for today? Well, the first thing to look at is on the bottom here where it says, disclaimer, this is information only. I'm not making a prediction. All I just shared with you is comparisons between the 1972 period and the Nifty 50 and the AI craze that's going on right now. The top chart right over there that you see is the 1972 peak. And this is the pattern in there that took you from the end of 71 through the end of 72 and the peak. This rally over here was about 10 or 11 weeks off of this low. Look at this pattern over here. This is the beginning of 2025, end of 24, right through the beginning of this year. You could see that, well, there's an odd similarity to this. And then this rally right there in 1972, well, there's the rally right over there. You can see that once our indicator turned negative there, the bear market started. Over here, you could see, well, it's still positive. And this is running already about 6 or 7 weeks past the length of this peak right over here. What does this mean? Well, I could probably go back and find you other scenarios where the stock market lined up almost perfectly, and then what was looking like would follow didn't happen. So that doesn't mean this is going to happen. But when you look at all of the other comparisons that I just gave you, you've got to wonder what's going to happen after this AI craze. And I promise you that these stocks that are the top 10 stocks in the market, at some point when this peak comes, they're going to lose 20, 30, 40, 50% of their values. And you can see what they would affect, how they would affect all of the connected ETFs and the indexes that are the widely viewed indexes. So I wanted to show you this. I'm not making a prediction right now, but there's a good reason to believe that there's information here that you could use, especially as an investor. For short-term traders, maybe there's not a lot of value, but for investors, people that are looking at a longer term, I hope you're illuminated. And I hope that your radar is on, because there's something to watch for. That is my look at the comparison 1972 to 2025. Let's look at the stock market brief for this week. Stock index surged early in the week. They were anticipating a Fed cut. Trump, Xi, well, they had their meeting and they were looking at anticipating that. And they made some kind of a deal that we don't have anything really certain on, other than because they're going to look at fentanyl, the tariffs, China's tariffs will come down from 57% to 47%. So goods that are coming in to this country are still going to be tariffed at 47%. For those of you that think that the tariffs don't matter, there was a huge accumulation of inventories by companies when the tariffs were just getting ready, when they were just getting talked about. And once, at different rates, these companies are going to use up that inventory, then the pass-throughs begin. So that's really why the probabilities of inflation still coming and still picking up is high. Plus, the market was looking at all these earnings reports coming out this week. Thursday, stocks were down big as AI sentiment soured on the amount that they're spending. Meta got crushed, as I said, and Microsoft fell. But Friday, that reversed early overnight as the indexes jumped. S&Ps were down 68 on Thursday, and then today we're up about close to 60 at one point early in the morning. But now, as I do this report, the S&P 500 has fully given up that whole gain and has moved down pretty sharply. So Apple, which was up, sizably, now has given up that gain and it's moved slightly to the downside. Amazon is still significantly higher because their AWS division is doing great. So that, of course, they both moved up to new highs today, but Apple is reversing. Fed, well, they cut rates as expected. I sent this out to my members that this is what I thought would happen exactly. They cut rates by a quarter. They're ending QT in December. That means they will no longer reduce the size of their balance sheet. You got to wonder what that means in their mind. But they said December cut is now doubtful. And again, Trump's lackey that he sent there in their Mirren wanted a rate cut of 50%. And so that's why he sent him in there to push down interest rates. And you know, Powell's leaving. He'll be gone. So we're going to have a much more dovish Fed coming on once Powell is gone. So between Mirren and whoever the dove is that President Trump puts in, because he always wants lower rates no matter what is going on, that is likely to see the short end of the market move to the downside. But the bond market, as I showed earlier in the show, I believe is in trouble into next year. And that's because of the inflationary scenario of a more dovish Fed. And I think the bond market is going to be in a lot of trouble. And my longer term analysis in the bond market warns of weaker bonds into 2026, which I will show as we do some of the longer term analysis moving forward. The government shutdown, we're day 31 right now. The 35 days is the record that was under Trump's first term. So we're going to probably get up on that record unless these well, I'm not going to label them with the word I want to use, but unless they can get together and figure out a way to end this and then talk about the problems later, I'll make one political statement right now, and that is that the problems are not because these guys aren't talking now. The problems are because the government spends too much and they got themselves into this problem. Right now, 31 days, 35 days, investors don't care. They've been buying stocks no matter what because they got to have AI. Indexes, well, if they have to have AI, that's why the NASDAQ was up around 2% on the week, maybe a little less right now. Dow and S&P 500 up less than 1% because it just gave some back. And the Russell has been weaker. So that means the rotation is really rotated. They were buying the small caps, and now they're buying the high caps. And the Russell has been pretty weak this week. And as of noon today, it was down about, I think, 1.5 or 1.7% on the week. So the small caps are getting sold. That is what the market brief is and about what has moved the markets this week. And now we're going to get into analysis. We're going to look at the S&P 500 and the VIX multiple time frame analysis and projections. And I'm also going to tune into our MCM, our market condition monitor. And for some reason, I keep wanting it to be 2024. I don't know what there was about last year that I liked so much, but this is 2025 in case you are watching this video. So this is, I think it's 2025, yes. Okay, so let's take a look as we switch over into the charts. So I'm going to move first into the S&P 500 weekly and daily, as you can see right over here. Now, this is the chart that I showed last week, but what I've done is I've removed the overlapping cycles because the 26 bar right over here, which lines up with the FEZ and DIA, has exhibited the biggest influence. And what that's done is become more apparent on the S&P 500. So sometimes when there are a lot of when there's a lot of disparity and the different markets, the different indexes are out of synchronicity, then they fight each other and you can't really get a good read on it. This, in the case of what's going on right now, it's become a little bit easier to read when I look at it. Let's take a look here at the S&P 500 on the weekly chart. You can see in here that thanks to Mark VP, we're still giving him credit. We have this 37 bar cycle in there. And you can see how it aligns here on that trough, here on that trough, here on that trough, and likely to be here in this trough towards the end of the year. What that means is that there's likely a declining phase in the stock market that is going to be in existence during a period which is normally positive seasonally. So people would challenge that. How can the market go down in December? Well, there are some Decembers when the market does go down. So it's not that they always go up, but there are some Decembers that it falls. And especially when you have this kind of a rally that's going on, which from April with this positive momentum really has not looked back. These yellow zones are where these troughs come in. And you can see where they all aligned right over here. You got the biggest decline. You have a situation right now where two of the three align here out towards the end of the year, and that is very likely to bring a correction. Now, this cycle that you see right over here, so this rising phase right there, And this rising phase right in here on this minor cycle, these are uncorrected. So you can see that, when this is as small as 3%, this was 6%, this was 11%, that correction there, and of course this was 20-something% in that correction right there. I don't really know the depth of where this is going to correct to. I would say it's very reasonable to get it to correct down to this dominant 23.6. That would be a 7% correction down to 64.15, but it could fall deeper to these other support levels that you can see right in here. I would say that it's highly probable we're going to see a weaker market between now and sometime towards the end of the year, where there will be some very sizable selling that comes in there because you have a lot of correcting to do, and you have an AI situation that once they start to fall, it's going to really affect the indexes. Here you see on the daily chart, now we're going to look at this in a couple of versions. Here you could see the cyclical rhythm in here that we've now adopted in line with these other indexes because they're proving to be dominant. And you can see that this is still pointing to the upside. Well, right over here, you could see the slim ribbon PO is still bullish. It's still green, and it's pretty likely it will turn up in here and give you another green arrow unless this really falls apart. You have the support zone right over here, which comes in between 67.80 and down over here around 66.90. I think it's a pretty high probability this cycle will get down in there. Now, if it sells really hard and you get below that cycle low right over there, which is the low right there was, gotta read this, 65.50 right under there, then it will warn that this top is in place. So if it gets close to that, it'll still give us a pretty good warning of that. Now, what's really interesting is that you see this upside arrow pointing to the top of that channel right over there. If I go in here and I look at, last time we were live and I gave the positive prediction of what the shape of the cycle could look like if it were positive, this is what I had in there. It absolutely followed it perfectly on the upside. So it took the positive track right up to that resistance. And here's where those other cycle overlaps are in there that we were showing, and that the potential for it to fall down in here. Even if it got up to this level, you could still get down and test this low that I just showed you on the other chart. So what is the negative scenario? If this is the positive scenario, what is the negative scenario? Well, the negative scenario would be that it does this. It, comes down in here, finds the support, rallies and fails, and then has this big decline. Yes, this timing right over here takes you out into the 3rd to 4th week of December. So maybe it falls out into the 2nd or 3rd week of December, and then you have a year-end or Christmas rally after that. But this is the negative scenario. So if I go back to the weekly, that would exist within this corrective period out over here through December. That would be what I would look for as a pretty high probability. This being the negative scenario, comes down, rallies, fails, and then really gets sold very, very hard through the beginning, through maybe the third week of December right over there. That's the negative scenario. The positive scenario, again, is that it has the rally, it sells off, makes the weekly low right over there, and then off to the races again on the upside. But I have a hard time believing in that one because of the valuation situation. So I'll go back to the one without the projections on it. And this is, what we're looking at right now without putting in those projections in there. Right now, everything that we have is positive. Positive option bias indicator here. Green positive slim ribbon PO. Positive reversal scalp. Positive slim ribbon. Everything is positive. So we're at the point now where the market has to show us weakness or there is none. And the correction that I'd be looking for in here will be sideways or small down. It will be another one of those 3% declines that you had right over here. And then the market's moving back to the upside, maybe making a compound top, but it would take a long time and then the top wouldn't really form until sometime next year. But the monthly patterns say there's trouble into the middle of next year. That's why I kind of believe that you'll get a sizable sell-off here. You get this rally out over here, and then you get a very sizable decline into next year. But I'm jumping the gun on the bigger picture. So you could get the idea now on what we're looking at. So if this was a decline that was likely to come right over here, and it's an interesting reversal that you see right now in the markets. Here we are at 1:13 Eastern time, and the big rally, it's giving it up right now. So if the markets, if these were to begin to turn negative, you would then understand that things were changing onto the downside, and this peak was in place. So we have to wait for that. I'm going to show you, this is important. I'm going to show you the VIX right now, because if the VIX, if this is right and this decline comes out over here into December, that's this cycle right over there, then the VIX would show you a time frame in there where it's likely to rally. In other words, where VIX could move up. And just coincidentally, well, look at the weekly here first, or maybe it's not so coincidentally. This is a period where we would expect the VIX to try to get a pop before you get into this correction on the weekly. But this is the daily. After making that saucer bottom and having that big spike that you see right there, this kind of says another week or week and a half where the market could try to hold together. But then this period over here, November into this period of mid-December, that's this phase right in here, has the risk of much higher implied volatilities. So that would mean to me choppy in here, maybe you get a pop up here, it pulls down again, and then sometime over here, late November through sometime late December is this period where there's a possibility of big upside spikes in implied volatility. And that's how it lines up with these corrective periods right over here. And then, of course, taking that negative scenario that you see right there in the indexes, this lining up right in here with that period in the VIX. So that's how I put this all together. That's how I'm looking at the multiple time frame analysis and our indicators, applying other things like the VIX, which would move inversely to the stock market. And that's really one of the great values of doing the analysis the way that we do it. Now I don't know how to get my screen back up. That's so weird what's going on here. Okay. So now I want to come over and show you the market condition monitor. So the market condition monitor, I hope you're seeing that right now. Matt, I have to get a new lesson on how this changed in here because it's my screens don't look the same. Here's our market condition monitor, and you can see on the intermediate right over here as I look at the indexes that the likelihood of still trying to hold together is high, because you can see they're still very bullish. You see Apple's been very bullish, and of course it had that big upside explosion in there. When I switch over and look at this on the short term, right over here, we'll see that things are actually trying to change as they've had downticks from very bullish to bullish or neutral. So the IWM is neutral, and as I said, that is the one that's underperformed the market this week. So that's a look at it on the short term. Now, if you look at it on the near term, which is giving you signals of over the last just few days and projecting out a few days, you can see what's going on in here now. It's changing to slightly bearish. So this is the beginning of some sense that things are changing. But when the short term changes from bullish to neutral and then to slightly bearish, then we're going to know that the risks are really increasing in here. Let's just take a look at like the top 10 short-term stocks on the bullish side, and then the bearish side. Here's the First Solar the solar stocks had monstrous days in here. So First Solar, Uranium, Taiwan Semiconductor, Cencora, Bank of America. Boy, the banks had some big up days. GSK, URA, which is uranium, the dollar UUP, that's turned very bullish. That's interesting. Western Digital, Van Eck, Oil Services, so the oils are starting to strengthen in there. Of course, AMD, that's your very bullish stocks. And let's take a look here at the very bearish ones. Verizon, Takeda, very bearish. Synopsys, MGM Resorts. Anybody following the absolute devastation that's going on in Las Vegas understands this, because their streets are empty. The casinos are empty. It's just crazy what's happening there right now. But when you charge $300 a night for rooms, and then $60 a night for services, then $40 a night to park, you're not that anxious to go there. It's pretty hard to make back $400 a day in Las Vegas. XOP negative, AT&T negative, Wingstop negative, the ICE Exchange negative. I still pay them money. MA, MasterCard, Brinker, DPZ, Domino's. These, if you saw what happened to Chipotle, you understand that we have a very over-indebted consumer out there, and they're likely to be cooking at home more. So maybe that's what's going on. That's a look at the market condition monitor. Let's get back to the screens over here. And, that's really all that I had to show. I think I covered a lot. I hope if you're watching a clip that, and you're on YouTube, you go back and watch the clip that's going to get put up, or watch the whole show that I made the comparison of 1972 to 2025. I think that's going to be very interesting to you when you watch that. The MCM that I just showed you is a level 3 and level 4 application that we have. So I want you to go there and take a look at that. And I promise you I'm going to fix these dates, because I just looked at my phone and it is 2025. So I was confused. The cycle analysis workshop, we're having this special, and we went into depth on that also earlier in the show, so you should go watch that. It's an amazing opportunity to learn cycle analysis, as our team knows it, and also to get unbelievable help from Slim AI, which is just there to help you with the learning process. And I think you will absolutely love working with Slim AI, and of course learning from this amazing workshop. $400 off. You don't even have to be an askSlim member to get that. If you're a level 4 member, write to Matt and he'll send you a special discount coupon, and you'll get it for $500 off. So that would be only $797 for level 4 members. If you upgrade to level 4 and then you tell Matt you've done that, and then he'll give you that special $100 savings. So it's a great way to get these exclusives. Write to Matt at askSlim.com for those discounts right there, or go to the top of the askSlim.com website, click on the cycle analysis workshop for that information. That is it. You can learn from us. All you have to do is become an askSlim member and spend some time with us. And team, how do we do today?
We did great.
I think so.
That was awesome. Really
Fantastic
interesting
show.
fun. Great job, everybody.
Yeah. All right. Thanks a lot, and we'll see you next time.